Ever wondered about the intricacies of Walmart's stock splits and their impact on your investment portfolio? Well, you're not alone. The world of stock splits can be as fascinating as it is complex. A stock split is a corporate action that increases the number of a company's shares by dividing its existing shares. But why would a company like Walmart decide to do this? Imagine a pie. If you slice it into more pieces, you're not creating more pie, you're just dividing it differently. However, each slice becomes more affordable and attractive to a wider range of investors. That's precisely what Walmart aims for with a stock split. It's a strategy employed by many successful companies to keep their shares accessible, and it can potentially enhance the liquidity of the shares. Stay with us as we journey through the timeline of Walmart's stock splits and their impact. Let's delve deeper into this intriguing world of stock splits and their implications for investors like you. Walmart has had a fascinating history of stock splits since its inception. This tale begins in 1971, just a few years after the company went public. Walmart's first stock split occurred that year, setting a precedent for the company's approach to stock splits. From there, the company experienced a rapid pace of stock splits throughout the 70s and 80s. The second split occurred in 1972, just 1 year after the first. This was followed by splits in 75, 80, 82, 83, 85, and 87. Each of these was a 2-for-1 split, effectively doubling the number of shares owned by each investor. The 90s saw a slightly slower pace, with splits in 90, 93, 95, and 99. The new millennium brought only one split in 2001, before Walmart took a long pause. Now, what's the effect of these stock splits? In the short term, they often result in an immediate increase in the stock's price due to increased demand. This is because the perceived affordability of the stock increases, attracting more investors. However, the actual value of the company remains the same since the market capitalization is unaffected by the split. In the long term, the effects are more complex. They can signal a company's confidence in its future performance, which can positively influence investor sentiment. For Walmart, the regular stock splits throughout its history have helped maintain an image of stability and steady growth. The most recent split, in 2001, marked a significant shift in Walmart's approach. While the company continues to grow, it has refrained from further splits. This suggests a more mature stage in the company's life cycle, focusing on sustainable growth and dividends for shareholders. As we can see, each split has had unique impacts, shaping Walmart's growth and investor sentiment. The history of Walmart's stock splits is a testament to the company's adaptability and resilience, and a fascinating story in the world of finance. So, what do these stock splits mean for investors like you and me? Well, let's break it down. Stock splits essentially increase the number of shares an investor holds, without altering the total value of their investment. It's like dividing a pizza into more slices. You still have the same amount of pizza, just more pieces. For Walmart investors, the advantage is clear. A stock split can make shares more accessible to a larger pool of investors. When the price per share drops after a split, more people can afford to buy in, potentially driving up demand and subsequently the share price. But it's not all roses and sunshine. While a stock split can make Walmart stock more attractive to smaller investors, it doesn't necessarily guarantee an increase in value. The company's performance, market conditions, and a host of other factors will continue to influence the share price. And remember, while you'll hold more shares after a split, the total value of your investment remains the same. It's not an automatic ticket to greater wealth, but rather an opportunity for more people to invest in a company they believe in. However, seeing a company like Walmart perform a stock split can be a positive signal. It might suggest the company is confident about its future performance, expecting the share price to rise over time. So, understanding these splits can be crucial in making informed investment decisions. To sum up, Walmart's stock splits have been pivotal events in its financial history. Over the years, these splits have allowed more investors to enter the market, consequently enhancing Walmart's financial strength. They've facilitated asset diversification and made the retail giant's shares more attainable to the average investor. It's these strategic financial moves that have contributed to Walmart's sustained growth and robust market position. Remember, knowledge is power, especially when it comes to investing in giants like Walmart. Thanks for joining us today, and don't forget to like, share, and subscribe for more insightful content.